Strategy 2, we're going to get into it. I'm going to share my screen and we're going to go right into it. Okay, if you want to review strategy 1, it is in the educational channel on Discord. Watch that. This isn't about strategy 1. This is about strategy 2. Okay, so we're going to get into strategy 2 now. So strategy 2 is consolidation. Strategy 2 is based on when market is moving sideways or consolidation. Okay, so strat 2 is a powerful strategy which capitalizes on sideways movement in the market, also known as consolidation. In this strategy, we will look to capitalize on limit orders, area of sensitivity. The sensitivity could be demand zones, or it could be significantly respected trend lines or channels, although it will be less so than demand zones. Okay, we will usually use trend lines and channels in confirmation with demand zones. Okay, with today's market environment and fundamental direction being so volatile due to many reasons, some being COVID, inflation, interest rates, trade flows, for example, it has diminished the consistency of which a trend relies upon. So for strategy 1, we rely on consistency on a trend. That consistency is starting to fade. Why? Because the market is reacting to every single thing that's happening. When inflation goes up, market value of currency goes down, and interest rates stay the same, then it goes up. Consistency in its trend is less so in terms of its length. Okay, I forget that the word for it, but in this scenario, in the market we're in, the longer we're in a trade now, the higher the variable of the increased chance of a loss is what I'm trying to say. You're increasing your exposure the longer you're in the market, because consistency of a trend is now much more difficult than it was before. Okay, so fundamental direction can come to can many times unknowingly and unexpectedly change in today's market, which we just talked about. And due to these market changes, we'll be putting more weight on strategy 2. Strat 2 will allow us to capitalize on high probability quick in, quick outs, with the average hold time expected to be less than 6 hours. The foundation of strat 2 is to capitalize on impulse moves off area of sensitivity, okay, which we'll get to in a second. Okay, the 2 most important areas of sensitivity are demand zones and trend lines. Okay, the reason why zones and trend lines are sensitive is due to the amount of orders located at these areas. The sensitivity or impulse of these areas are due to the execution of, as we know, take profits, stop losses, right? Limit orders, stop orders, okay? And the market finds these levels and recognizes these levels as important, okay? So the important thing to understand before we get to anything, I just want to quickly draw this, okay? We know that zones, let's just say that this is a zone, okay? Doesn't matter which zone, it's a level of importance. This is an upper zone, this is a lower zone. This is a level of battle between buyers and sellers. Sellers, okay, and buyers, all right? And this level is determined based on historical information. If we know that there is respect from this level, we know that there will continue to be respect from this level. Okay, so what's really important to understand in its basic simplified form is that when price, whether or not it moves to the upside or whether it moves to the downside, there will be sensitivity, which we call impulse moves, when we've identified significant zones, because this is where orders will be taken, will be entered. There's impulse moves. There's millions of these orders, take profits, SLs, limit orders, stop orders being executed, causing a bounce and a battle between buy pressure, sell pressure. Okay, that's in its basic, simplest form. Now we're going to get into these obviously a lot deeper. Okay, so strategy 2 has 3 subsections: strategy 2A, strategy 2B, strategy 2C, which we can see variations of strategy 2. Okay, just like with strategy 1, all right, we had variations of strategy 1. We had A, B, C, D. Okay, here we have just A, B, C. Sorry, I have a flow plane. Anyway, so, okay, back to what really matters. Strategy 2 has 3 subsections: strategy 2A, strategy 2B, strategy 2C. Okay, which means we're dealing with limit orders. Strategy 2 is limit orders only. Strategy 1 requires price action confirmation and entry confirmation. Okay, strategy 2 is limit orders because we are trying to capitalize on the quick impulse at contacts of area of sensitivity. Now, let's go through these 3 scenarios: strategy 2A, 2B, 2C, and we'll use this chart. Start with 2A, of course.